Good morning, everyone. I'm John Ravitz, the Executive Vice President and Chief Operating Officer for the Business Council of Westchester. On behalf of Marcia Gordon, our President and CEO, I want to welcome everyone to the BCW's ongoing featured webinar series. As our members know, when the pandemic hit in March, the BCW quickly pivoted to become a daily resource for our members to make sure that they had all the most updated information that they could have from both the county, the state, and the federal levels of government. All of us lived through a tornado of different issues that were popping up, issues that we needed to get clarification on and answers. And the BCW created our Business Resource Center as a way to be the home of all of those type of questions and answers that we can provide for you. And our featured webinar series is just another example of that. And today's topic is one that I think, again, with the ongoing issues that have centered around the pandemic is going to be very important for folks to hear. We are also putting this on our Facebook Live page as well. And if you do have questions for the panel, please put them in the chat room and the Q&A box, and they will be fielded. To get us started, I'd like to introduce Howard Hoff. Howard is the longtime resident and active community member here in Westchester. He leads the commercial business group at Marks Paneth, a cross-disciplinary team of professionals who provide audit, accounting, tax, and consulting services to business clients in industries such as retail, manufacturing, wholesale and distribution, food and beverages, life sciences, jewelry, professional services, and others. Howard, we're so glad that you could put this webinar together. We look to Mark Paneth as being a true leader in Westchester County and New York State to help businesses as they navigate through these uncharted waters that we are still in. And I'm going to turn the program over to you.
Thank you very much, John. Hi, everyone, and thank you for joining us this morning. As John mentioned, my name is Howard Hoff, and I am the partner in charge of the commercial business group at Marks Paneth. For more than 25 years, I've worked very closely with clients to improve the organization, structure, and profitability of their businesses. We all know that the COVID-19 crisis has created an entirely new set of challenges for business owners. Today, my colleagues and I are looking forward to sharing updates and guidance that can help you navigate the Paycheck Protection Program and other available forms of COVID relief. Presenting with me on this webinar are two of my partners in the commercial business group, Pamela Chinchada and Mark Cuccia. Pam specializes in providing tax, accounting, and consulting services to businesses in many different industries, helping them strategically plan for the future. Mark oversees all aspects of his clients' audits, review, and compilation engagements, and frequently assists businesses, clients with forecasts and modeling. Mark, Pam, and I have a lot to cover today, and we'll try to answer as many of your questions as we can. So let's get started. Our program today will cover changes to the Paycheck Protection Program loans that were included in the new Consolidated Appropriations Act of 2021, which was passed in December of 2020. There was numerous changes that were made to the first round loans that came out of the CARES Act. These were additional eligible expenses were added. It clarified the selection of the covered period of the forgiveness. It simplified certain application processes. It clarified that businesses not in operation on February 15th shall not be eligible for an initial PPP loan, first or second draw. And it creates a second PPP loan, referred to as the second draw. There is employee retention credit eligibility, and time periods were modified and expanded. So Mark, can you go over what the additional expenses are that are now covered on the new act, the new ones?
Sure. Thank you, Howard, for the question, and good morning, everyone. So the SBA expanded its definition of what's included in qualifying expenses, and it now includes things like business software or cloud computing services, and those are expenses used to facilitate business operations. It's used for companies to produce their product or service delivery. It's used for processing payroll expenses or to process human resources and benefits. It's also used for sale and billing functions. And most importantly, it's used to track your supplies and really your general accounting. So it's your ERP system. The other expenses that are now part of the qualifying expenses, it includes now costs related to property damage, that occurred during the riots that happened during the pandemic. It includes supplier costs for goods that are essential to the operation of the company. And it also includes covered expenditures for PPE, for your employees. So one thing to note is the split between payroll costs and these other expanded costs did not change underneath the Appropriations Act. It is still 60% payroll costs to 40% of these new expanded costs.
Great, Mark. Thank you for that. You mentioned covered supplier costs. I think that is a very important change that is going to be very helpful for borrowers who are looking for forgiveness. Can you go over what would be covered in those?
Sure. The SBA defines those covered supplier costs as payments made to a vendor for the supply of goods that are either essential to the operations of the entity and that are also made pursuant to a contract, an order, similar to a purchase order, and that they're in effect prior to the cover period, basically prior to the time that the loan was dispersed. And it covers those costs when they're paid after that loan disbursement or during the covered period. And that covered period can go anywhere from 8 to 24 weeks after that loan disbursement. So what does that really mean? Basically, any purchase order that was entered into, and that could be both written and verbal, that were entered into prior to loan disbursement and paid during that cover period is now covered. That goes into that 40% calculation for those qualifying expenses. A couple of things to keep in mind. The payments must have been received or must have been paid after receiving the funds, which I had mentioned. And the other thing is that we notice is that we think it's going to be a lot easier to substantiate that, because you could substantiate that 40% cost with maybe 1 or 2 purchase orders. I mean, generally speaking, you're going to be making larger purchases, and it may be a lot easier to pull that documentation together when you have to substantiate your loan forgiveness application with, a single or a few purchase orders. So, and this is also in effect for both the first round of PPP loans and the second round of PPP loans that we'll get into a little bit later.
That's great, Mark. Thank you. I just want to clarify you talk about a contract. Could the contract be just an oral agreement between 2 parties rather than having to be a signed contract? Saying if you don't receive a purchase order, but you have an understanding that somebody placed an order, it's like, and you recorded a sales order, that type of thing, would that be sufficient?
Yes, that's correct. It doesn't have to be written. It could definitely be an oral contract between you and your vendor.
That's great. And we'll be going over the substantiation and what you documents and what you need to put through later in the program. And Pam, can you go over what's meant by the selection of the cover period forgiveness?
Sure, Howard. Good morning, everyone. The Act allows the borrower to elect a cover period ending at the point where the borrower is choosing between 8 and 24 weeks after the loan origination.
Okay, so can you choose any period in between that you choose now?
Yes, absolutely. It makes it easier for the employer to use the money and apply for full forgiveness.
That's great. And that was a little bit ambiguous and it wasn't addressed in the first round of the PPP, but this makes this much easier to understand.
Yes.
And we'll also go over later, everyone, so you know that the importance, how this covered period can interact with the employee retention credits when we get into that later in the program as well. And also, Pam, can you go over the simplification of the forgiveness application and also the change for the dollar amount?
Absolutely. The simplified form used to be for loans limited to $50,000. They increased that limit to include loans up to $150,000. What the simplified form is, it's a 1-page forgiveness certification. You must sign the application and attest to the accuracy of the information. You need to include a description, the number of employees the borrower is able to retain because of the covered loan. You also need to include the estimated total amount spent on payroll costs and your total loan amount. Documentation that you're required to keep in your files. For 4 years, you're required to keep your payroll documentation. And if for other costs, you're required to keep the documentation for 3 years. Something to note, though, is that some lenders are still requiring detailed information to be submitted with your application. So we suggest you always just check with your lender to ensure compliance with their rules.
That's great. Thank you very much. And also back to you still, Pam. If a company didn't receive a loan under the original PPP program, can they get one now?
Yes, absolutely. Eligible borrowers who did not receive a PPP loan in 2020 may now apply one under the original PPP program's terms. Borrowers who did receive a PPP loan in 2020 may not receive a second loan under the first round program. See, we'll be talking about the second draws later on. But if a borrower received their first draw loan prior to December 27th, 2020, the loan amount for the first draw can be increased if changes in the guidance result in an increased first draw loan. Borrowers who received a PPP loan but returned some or all of the loan proceeds may reapply at this point. In addition, borrowers who didn't receive or accept an amount for which they were legally entitled may reapply and receive the difference between what they actually received and what they were legally entitled to and approved for. Borrowers who did not receive a PPP loan in 2020 may now calculate their borrowing base using either the 2019 or 2020 calendar year payroll costs.
That's great. So what would happen, Pam, if somebody has already applied for forgiveness and received the forgiveness? Would they be able to go back and modify the loan at that time for back to the original first draw loan?
It's our understanding that they cannot.
Okay. So, but we also believe that if you put, saying talk to your financial institution, that if you applied for your forgiveness and it's not yet completed with the financial institution, let them know that you want to go back and modify your loan, and that will be a financial institution by financial institution decision there.
Absolutely. We suggest speaking often with your financial institution.
Right, and we're talking about amending the and asking for more money. Pam, can you just go over what the main, pretty much what the main driver of that would be? Saying it has to do with the what a change that they made later on in the first round.
Sure.
So a lot of people who got in early wouldn't have included.
Absolutely. When the PPP loan was first introduced, it did not include compensation for officers or partners. So now with the new rules that came into play, you're now allowed to include partner compensation in your calculation.
Gotcha. Okay. And how do you calculate that for self-employed borrowers?
Self-employed borrowers who have no employees and file a 1040 Schedule C are able to borrow 2.5 times the average monthly net profit based on line 31 of the 2019 or 2020 Schedule C. The net profit for this calculation is capped at $100,000. So the maximum amount of the loan with no employees is $20,833. But if self-employed borrowers with employees and file a Form 1040 Schedule C are able to borrow 2.5 times their average monthly payroll costs, calculated as dividing the sum of their 2019 or 2020 Schedule C line 31 amount, capped again at the $100,000, or $20,833, and the payroll costs paid to their employees by 12, divide that by 12.
Great. That's perfect, Pam. Thank you so much. So Mark, can you go over the terms of the PPP second draw, the eligibility and the loan amounts and any other special rules that might be out there?
Sure. So when the Appropriations Act was passed, it created the second round of PPP loans called the second draws. Eligibility is for companies that have no more than 300 employees, which is down from 500 for the original PPP loans. You must have used or will use your first round PPP loan. You have to demonstrate at least a 25% reduction in gross receipts during any quarter of 2020 compared to the same quarter of 2019. And the gross receipts is defined as, or is the same as, or accounted for as the same, under the same method as your tax returns. And what that means is that if you're a cash basis taxpayer, it would be based on actual cash receipts. If you're an accrual basis taxpayer, it would be on your accrual basis cash receipts. And that does exclude capital gains. And you still must satisfy the necessity test that was laid out in the first round of PPP loans. The maximum loan amount is the smaller of 2.5 times, average monthly payroll costs for 2020, or if the company elected to use 2019 of 2019, or $2 million, again, whichever is less. And again, that's also similar to the first round of PPP loans. There are special rules that apply to seasonal businesses, as well as restaurants and other businesses in the hospitality industry, hotels and things like that. They can use 3.5 times of average monthly payroll costs. The decline in revenues needs to be shown at the time of application, except for those loans that are $150,000 and less. And then there's also a cap for commonly controlled businesses, and that cap is $4 million. And a commonly controlled business is any related business where there's an ownership or control of 25% or more in that business. The program runs until or through March 31st of 2021. So we still have a little bit of time to get those applications in. And again, the same general rules apply to the second draws of PPP loans as they did for the first draw.
Great. A couple of questions for you, Mark, to go through. Can you just discuss what acceptable documentation would be? Because you said that you have to document your decline in revenues at the time of application. What would you have to show for an accrual basis taxpayer as opposed to a cash basis taxpayer?
Good question. What we basically are seeing now is for an accrual basis taxpayer, internally prepared quarterly financial statements will show what those numbers are going to be like and what that decline is in gross receipts. And for a cash basis taxpayer, I mean, it's as simple as bank statements. It's going to be, based off of the amount of cash receipts that are running through the bank statements because it's a cash basis taxpayer.
Right. So if you would get whatever quarter you would pick, you would actually give an internal financial statement that shows for an accrual basis what your revenues are, what your margin, your gross profit is, and then showing your expenses to come to a net profit. And then you would show the previous period and you'd show this decline. I don't think they only just want the revenue piece of it. They wanted to actually show what your business did.
That's correct, yes.
And with the cash basis, it would be as simply as creating a Excel schedule or a handwritten schedule that would show all of your deposits, which are revenues, and show the backup behind it for both of the periods with the bank statements.
Correct.
Great. And I just want to clarify you talked about FTEs as well. What is an FTE? What is the acronym?
I mean, it stands for full-time employee equivalent. And again, if there's any pay cuts that happen during that period, or if there's a reduction in FTEs, it may reduce the amount of forgiveness that a company is receiving.
Understood. Thank you for that. And Pam, for the first draw and the second draw, there's always been a concept of necessity. And they're talking about a necessity test on the second draw specifically now. Can you discuss that a little bit?
Absolutely, Howard. You must certify that you need a second draw PPP loan because current economic uncertainty makes the loan request necessary to support the ongoing operations of your business or organization. This has been a troublesome question for many potential borrowers and many of our clients, especially those who have not experienced a significant drop in business revenues and activity over the past 9 months. As we advise our clients in the first go around of the PPP loans last year, if you apply for a loan, you should document your need for the loan at that moment, perhaps by putting together a financial forecast for your business based on current orders, production backlogs, etc. Document your business's outlook as of today and where you feel it will be if you do not receive the requested loan. One of the key points to making the certification is what the current outlook is today, not what actually transpires down the road.
Okay, thank you very much. So this is actually a very ambiguous area that needs to be addressed. In the first round of the PPP, the way that the SBA put out information to everyone was through frequently asked questions. and they modified the frequently asked question 31 that a lot of us who were living it then dreaded because it was not specific enough to really understand, and they put out a concept. Then later on, for people who borrowed, companies who borrowed in excess of $2 million, they created an additional form called the 3509, which is up on your screen right now. And these 3509 forms basically ask questions to try to assess what your eligibility was and your downturn of your business was. As Pam said, it's supposed to be a current outlook, not a what happened in the future, because how do you know what's going to happen in the future? But on this form, and I encourage you to go on, do a search in your browsers later on, and just take a look at it if you have questions of what you might have to answer 2-3 years down the road if it's reviewed by the SBA and they start asking questions, because there's no other guidance out there that what they would ask for necessity. But this might be a good guideline of what some of the questions would be. You'll notice that some of the question is unfair because it actually looks at what happened in the future. But how could you possibly know that at your time of your application? So it seems that it's a little unfair, but it's be a good guideline for everyone to understand. So Mark, if the first PPP loan forgiveness application is still pending, can you apply for the second round?
You can, yes. There's some qualifications and rules that are surrounding that, but yes, you can. You must have spent or will spend the original PPP funds by the time you apply for the second round of PPP funds. You still must meet the reduction in receipts and size requirements that we talked about. And you don't even have to have applied for forgiveness yet, but you have to make sure that you have spent your first round PPP loan amount, before application time.
So they're just trying to make it easier to get money out to companies in order to keep people employed and keep them in business right now.
That's correct. I mean, the whole point of it was trying to get money out as quickly as possible. So.
Gotcha. So, and Pam, can you go over the definition of what payroll costs are? And if there was any changes from the first round to the second round?
Absolutely. In the definition of payroll costs from first round to second round, there were no significant changes. The payroll costs include employee payroll, health insurance and similar benefits, including life insurance and disability insurance, retirement benefits, such as your 401k match, and state and local payroll taxes imposed on the employer, similar to your state unemployment tax. Payroll costs do not include your rent, utilities, and mortgage interest, and they never did.
Gotcha. But the rent, utilities, and mortgage interest is part of the 40% that can be utilized.
Yes, absolutely.
And then along with what Mark went over earlier with the additions to the what can be included in the 40%.
Yes.
Fantastic. Thank you very much. So Mark, can you just go over the financial statement impacts of the PPP loan forgiveness?
Sure. So AICPA has really two schools of thought as far as presentation and how it affects financial statements. The first school of thought is really treating it as a loan, kind of like the name implies. So it would show up on the balance sheets of companies, and it will stay on the balance sheet until the company receives legal release from the SBA, not only just from the lender that supplied the loan, but actual legal release from the SBA. And that's when you would wind up taking it into income. We believe that this is probably going to be the most widely accepted method because it's treating it as a loan, and it'll be classified within the terms of the loan on the balance sheet. So that's probably what we're going to see most often. But there is another school of thought that the AICPA believes that they can treat it as deferred grant income. And all that means is that it doesn't actually show up on the balance sheet. It actually shows up on the P&L. And there's a few ways where you can show it on the P&L. You can show it as a separate line item on the face of the P&L labeled as other income, or you can net the expenses that you're using, those qualified expenses that you're using to apply for forgiveness. Again, either method that you're choosing, whether you're showing it on the P&L as deferred grant income or whether you're showing it as a loan on the balance sheet, there's going to be a lot of disclosure in the notes to the financial statements, describing the method chosen, and certainly describing the terms of the loan and what the company believes whether they're applying for forgiveness or not. So I mean, there's going to be a lot of disclosure that you're going to see surrounding that. Some things to consider and always to keep in mind is this could definitely have some covenant compliance issues. So you want to speak to your lender, make sure that they're aware that you've received a PPP loan, whether it's first round or second round. Make sure that it's not affecting any covenants, or if it is, a potential waiver may need to be requested. So, I mean, you need to make sure that you're having those conversations with your lender, because they're going to see it in your financials. And there's definitely things that, need to be considered and discussed. So, and even if the PPP loan came from the same lender as your other financing, they may not necessarily know that you applied for a PPP loan, because some of the larger banks, they have portals where the application process is being processed. So your individual loan officer may not be aware that the company received a PPP loan. So we always recommend that you speak to your lender and keep them informed on what's going on.
Right. And what you're talking about in the covenant compliance is there's a lot of loan agreements have a no further debt that you can take out without the approval of the bank or the financial institution. So this is considered as additional debt, even though it's coming from the same bank. As Mark said, the left hand might not be talking to the right hand, so you still need proactively to go and get your covenant waivers, so you don't have an issue with your loan being in good standing.
That's correct, and never make an assumption that they know what's going on and what your loan situation looks like. So,
absolutely, good advice. And Pam, Mark went over the financial statement impacts. Can you talk about the tax treatments?
Sure, Howard. The initial intent when the PPP loan was first introduced was that the expenses paid with the forgiven PPP loan funds were to be deductible for federal tax purposes, and that the loan forgiveness would not be included in taxable income. Throughout the year, the IRS had come out and said that if you would not be able to deduct those expenses for which you received loan forgiveness for. Thankfully, towards the end of the year, Congress came out and said that no, the treatment of the PPP loan forgiveness is going to be what the initial intent was. So thankfully, it is a true double dip. The owners of a pass-through entity will receive increase in basis for the tax-exempt income related to the PPP loan forgiveness.
Right. So, and some of the states also are making it forgivable as well and following the federal. Other states are not following the federal. But as of now, in the tri-state area, all of the states have followed the federal, which is good news for us then, especially here in Westchester for New York, that it's not taxable in New York as well, which is great news.
Absolutely, Howard.
And Pam, I know this is going to be a mouthful of a question I'm going to ask you, but there's 3 different forms of applications for forgiveness that can go out. Can you go over the 3 different ones and some of the details that people should know about them?
Absolutely. I already spoke briefly about the short form, the 1 page for loans less than $150,000. Besides that form, there's the easy form. The easy form is for loans greater than $150,000. And if you can check one of the 2 following boxes. The borrower did not reduce annual salary or hourly wages of any employee by more than 25% during the covered period compared to the most recent full quarter before the covered period. And the borrower did not reduce the number of employees or the average paid hours of employees between January 1st, 2020 and the end of the covered period. You're to ignore reductions that arose from the inability to rehire individuals who were employees on February 15, 2020, if the borrower was unable to hire similarly qualified employees, unfilled positions on or before December 31st, 2020, or for a PPP loan made after December 27, 2020, the last day of the covered period. You also should ignore reductions in the employee's hours that the borrower offered to restore and the employee refused.
Wow, that's a mouthful right there. So let's try to break it down into just plain English for everybody. Is it if you kept all of your employees on, saying, and you didn't let anybody go, you didn't furlough anybody, and you continued paying them their salaries, then you have no issues, you have no reductions that you have to worry about.
Correct, and you can go ahead and use the easy form.
Perfect. Thank you very much. Continue. I know there's a bunch more.
Absolutely. The easy form shows the amounts of loan proceeds that were used for payroll and non-payroll costs. You don't have to give the detail or the breakdown of the payroll costs. The third form is your loan form. The loan form must be used if you do not qualify to use the short form or the easy form. It is a more detailed application than the easy form. You must include a schedule of employees who receive payroll less than $100,000 and also a schedule of employees who receive payroll greater than $100,000. All three of these forgiveness forms have certain representations and certifications that the borrower must sign off, including the dollar amount for which the forgiveness is requested, which does not exceed the principal amount of the PPP loan. The proceeds were used to pay business costs that are eligible for forgiveness, payroll costs to retain employees, your business mortgage interest payments, business rent or lease payments, business utility payments, covered operations expenditures, covered property damage costs, and covered supplier costs, or covered worker protection expenditures that Mark had talked about earlier. It includes payroll costs equal to at least 60% of the forgiveness amount. And you also must certify for any owner employee with an ownership stake of 5% or more. Self-employed individuals, general partner, does not exceed 2.5 months worth of compensation received during the year used to calculate the PPP loan, capped at $20,833 per individual in total across your businesses. And besides the certifications that I spoke about just now, there are other certifications that you must sign off on.
Gotcha. So I just want to go back up again. Wow, you're saying thank you for the information, but again, it's what a mouthful. So just going back to the top for the long form itself, stating that you have these people who made more than 100,000 and less than 100,000. Since this would have been done earlier in the year, so it would have been, saying hard to figure out who's going to make more than 100,000 and not. So you would default that back to the 2019, whether they made more than 100,000 or not, and they may not be making more than 100,000 in 2020 during your covered period, but those people who made more than 119 would go on that schedule. So this is as simple, if you're putting this together yourself, as putting the people who are highly compensated on one Excel spreadsheet and then putting the exact same headers and information for the people who make less than $100,000 on another. And then you, on the form, when you look at the forgiveness form, you would just add them together and it would go in a certain box that would carry forward to the final, to the base of the application. So there's nothing that's very difficult on here. It's just, you have to just be able to navigate through and understand what the rules are.
Absolutely.
All right, so now that we've talked about eligibility and what has to be there, et cetera, now there's backup that you have to give to your bank in order for them to review it and for the SBA to review for proving that your payroll costs are what they are and what your other costs are. And Pam, can you just go over what people can anticipate having to include as the backup for their applications?
Sure, Howard. The documentation verifying for payroll costs, by saying the documentation verifying the eligible cash compensation and non-cash benefit payments for the covered period consisting of each of the following you would be required to submit: bank account statements or third-party payroll service provider reports documenting the amount of cash compensation paid to employees, tax forms or equivalent third-party payroll service provider reports, the periods that overlap with the covered period, payroll tax filings reported or that will be reported to the IRS. Typically, that's going to be your Form 941. And also state quarterly business and individual employee wage reporting and unemployment insurance tax filings that will be reported to your relevant state. You also need to provide payment receipts, cancel checks, or account statements, documenting the amount of employer contributions to employee group health, life, disability, vision, or dental insurance and retirement plans that the borrower included in the forgiveness amount. You are also required to submit for FTEs, which Mark spoke about earlier, documentation of the time period that was chosen at the election of the borrower.
So basically what I'm hearing from you is if you claiming that you had a qualifying expense, you just need to show that it actually happened, it was for the covered period, and it was paid within the proper time frame that the covered period allows.
You've got it.
Okay. I like to try to just simplify things as much as possible. I appreciate it. Do you have any more that you keep going on?
I do on the non-payroll costs.
Great.
So if you're including non-payroll costs in your forgiveness application, the documentation that you should provide is for loan app, if you're including your business interest expense payments, the loan amortization schedules, cancel checks or bank statements showing proof of payment during the covered period. If you're including rent expense as a cost on your loan application, your forgiveness application, you should include a copy of the current lease agreement and receipts or cancel checks verifying eligible payments from the covered period. If you're using utility payments in your forgiveness application, you would need to provide a copy of the invoice for those paid during the covered period and receipts, cancel checks, or account statements verifying those eligible payments. The forgiveness application must be submitted within 10 months after the end of your covered period.
Great, thank you so much. Just a couple of things to give a little more information for is if you are in a self-rental, meaning you own the property or the business condo in which you're operating within, the rent expense is not looked at as the forgivable amount, but it's the underlying mortgage interest that you pay on that property. So it's a look through to there. Just wanted to point that out to everybody so you understand that. Well, I think we went over a lot of this forgiveness right now and talking about that. So I'd like to turn over to another piece that was a potentially available to a lot of people that could create a significant amount of cash flow. So Mark, can you talk about the employee retention credit?
Sure. So the employee retention credit, also known as ERC, it was originally a 50% refundable tax credit. It was a $5,000 maximum credit per employee on the first $10,000 in qualified wages paid to an employee in 2020. It applied to employers that were either partially or fully shut down due to governmental order, or experienced a revenue drop of more than 50% for any quarter in 2020 compared to that same quarter in 2019. That measurement continues each quarter until the first day of the quarter following the quarter in which gross receipts are more than 80% of its gross receipts for the same calendar quarter in 2019.
Wow, that sounds like a lot of legalese right there.
Yeah.
So can you state it a little more simply so I can understand it?
Sure. So simply stated, if you're shut down in quarter one, you will get the second quarter as part of the calculation. If you're down 50% gross receipts in quarter two, that means you'll get the third quarter to be included in the calculation. If you're down 20% in quarter three, so a combined 70% in total, you automatically get that fourth quarter because you're still below that 80%. So hopefully that clarifies the.
It makes a little. It definitely makes more sense because most everybody had a stay-at-home order in the first quarter, so that would enable them to get the first quarter, and that means that the first quarter nobody even received the PPP loans, because so that would
Correct.
make sense. Okay.
Yeah.
Any size requirements?
Yeah, there's company size requirements that you have to consider, to qualify for this. And then really what the Appropriations Act did is it made these easier to get. Actually, it made them where you are able to apply for both the PPP loan and the employer retention credit. Prior to the act, you had to choose one or the other. So most companies that we've seen, they were, applying for PPP loans. It just made more sense for them at that time. But now you can apply for both. So you can have a PPP loan and you can also apply for the employee retention credit. And you can do that by going back and amending your 941s to now apply for that credit. One thing to keep in mind, you cannot use the same wages that you're using as qualified expenses for PPP loan to apply for forgiveness, as you are then also applying for the employee retention credit. So there's now this interplay between trying to maximize the amount of forgiveness that you're getting on PPP, and also trying to qualify and get as much credit on the employee retention credit side. So, and I think maybe the easiest way to kind of demonstrate this is if Stacy can put up what she just did, thank you, put up some slides. These are two examples from the AICPA, and I think it kind of makes sense just to kind of walk through them quickly, just to see, what that interplay looks like and kind of how it, how it matters between PPP loan forgiveness and the employer retention credit. So in the first example that's on your screen, the facts are as follows. Employer X received a $1 million PPP loan. And they reported $1.5 million in payroll costs during the covered period on their loan forgiveness application. And the entire loan was forgiven. So the question now that is raised is, if they have $1 million PPP loan and they only needed $1 million of that $1.5 million of payroll costs that were reported on the loan forgiveness application, could they use that additional $500,000 that wasn't used for PPP loan forgiveness? Could they use that for the employee retention credit? And the recommendation from the AICPA to the IRS and the Treasury is that the answer to that question should be yes, because they didn't need that $500,000 again to apply for forgiveness on the $1 million loan. They did report it as part of the forgiveness application, but it wasn't used for the forgiveness.
So Mark, if I can just interrupt in there, is
Yeah,
that
sure.
a lot of people applied for forgiveness before the whole concept of the Consolidated Appropriation Act came through, allowing for the employee retention credits to be taken, and people just utilized the 24-week period to make their application easiest to be able to claim. And now they changed the rules after people applied. So that's why the AICPA is saying that since you actually changed the rules late in the game and some people might be discriminated against, that you should allow this to happen. And I guess you're going to go through one other, saying one where there's the other costs are involved as well.
That's correct, and that's exactly why they, they're posing this question to the IRS, because they ultimately didn't need to use that $500,000, and if this existed prior to them applying, if the Appropriations Act was passed prior to them applying, they would have only shown $1 million of payroll costs, because that's all they needed for the forgiveness of the first PPP loan. So, and then the second example, Stacy, if you don't mind just flipping forward. The second example kind of takes the similar fact pattern with, $1 million loan, $1.5 million in payroll costs. But what it also includes, and again, that was on the application itself, but what it also includes is that the employer had $100,000 of rent expense that they could have used on the loan forgiveness application for the PPP loan. In this case, they didn't put that on the PPP loan application because at that time, they were just looking at payroll costs. They certainly had enough. They didn't even need to go into that 40%, in qualifying expenses for forgiveness purposes. So again, a similar question that the AICPA is raising. Could this company now, since they only needed $1 million worth of cost to have the entire loan forgiven, could they use the $500,000 of payroll cost that wasn't used? And also, could they use that $100,000 of rent expense that would have actually offset, and it would have potentially given you $600,000 of payroll costs that you can now use to qualify for the employer retention credit and get a credit on that payroll. So again, the question was raised by the AICPA to the IRS and to the Treasury. They believe the answer should be yes. I mean, I think we all believe that the answer should be yes as well, but we're waiting to see what'll happen and whether or not they agree with the AICPA and make that clarification. So, but again, it's very important to see that interplay between your covered period, between the PPP loan forgiveness process to get the loan fully forgiven, and the employer retention credit, because now this credit is out there, and the fact that you can apply and get both, it really, really opens up a lot of planning that you have to, kind of look at. And we're still recommending that you try to use, obviously you're always trying to get full forgiveness, that you use the shortest period possible to get that full forgiveness on the PPP loan side, and then allow yourself the ability to use the remaining payroll costs that you didn't use for forgiveness for the employee retention credit, because it really is a valuable credit. And the fact that you can get both of them now, I really think, is going to be very meaningful for companies. So.
That's great. So if you can just go very quickly, because we have some questions to answer, but I want you to talk about the ERC that's available for 2021 that came through the Consolidated Appropriations Act. If you can just go through that quickly, and then we can get to our questions.
Sure, Howard. The ERC for 2021 was extended through June 30th, 2021. Beginning January 1st, the credit will be available to businesses with operations that were either fully or partially suspended by a COVID-19 governmental order, and only during the period the order is in force, or the entity's gross receipts are less than 80% of gross receipts for the same quarter in 2019. Businesses that were not in existence in 2019 may use a comparison to 2020 for the purposes of the credit. Beginning January 1st, 2021, the credit is 70% of qualified wages plus the cost to continue providing health benefits to the employee. The cap is increased to $7,000 per employee for each of the 2 quarters of 2021. 10,000 qualified wages times 70% for a possible $14,000 credit per employee. The 2021 credit is available even if the employer received the $5,000 maximum credit, the wages paid to such employees in 2020. The ERC for 2021 still has employee parameters like the ERC in 2020, but they are more generous in 2021 compared to 2020.
Pam, thank you so much for that. And the one thing I just want to bring up to everybody is if you actually use a payroll service, whether you're using ADP, Paychex, Insperity, or somebody else, they'll have the ability to give you a questionnaire to fill out, because I've seen ADP and Paychex, and they just basically say, what quarters do you want to amend for 2020 to that you're eligible for? You certify that you're eligible, and they do the calculations for you, and you'll have to work with your payroll provider. If you do your own, you'd have to amend your own payroll tax forms. Well, that concludes our presentation portion of this webinar. We have a bunch of questions that we want to get to. We have another about 10 minutes left, give or take. So we'll try to answer as many of the questions as we can now. But if we do not get to your question, we will be answering them in writing, and we'll work with John and Marcia to be able to get the information posted so you guys can have the answers for those as well. So one of the questions that came through, would storage fees be covered if you had to scale down and store your office items? To me, it's not completely stated there, but I believe that would be covered because it's a necessity that you'd have to incur because you had to scale down. Somebody else asked, can the covered period end date be after December 31st, 2020? It cannot be. The program ended at December 31st, 2020. But the covered period likely wouldn't get there because the 24-week period, this loan stopped in order to be out when they stopped funding, stopped to be able to, so your 24-week period would have been before December 31 of 2020. This is a very interesting question. I was actually just working this on a sale of a business this morning. They're asking if there's somebody is selling their business and has an outstanding PPP loan. Does the seller's PPP loans have to be paid off prior to a buyer obtaining an SBA loan? or can it be done at closing? What happens when somebody is selling, if there's a change of control that happens, the procedure that is required is an escrow account at your lender, at the PPP lender, has to be established. You have to have applied for forgiveness prior to the change of control, and you had at closing or immediately prior to closing, you needed to put the PPP loan proceeds into an escrow that would be held waiting till the forgiveness happened post-close. You would give them the bank account of the seller entity that it should go to afterwards. It gets reviewed, an escrow agreement is signed, and you fund, and then subsequent to when it's forgiven, it'll be wired back to the account. Somebody else asked, would payroll company fees be included in payroll costs or maybe cost of the operating the business? Payroll costs are definitively stated as being a cost that is in the other costs that is allowed to be there. Just reading through, apologize. Somebody asked a very good question. With the new administration in Congress, isn't it likely that there may be a change to the PPP forgiveness rules? If so, would it make sense for us to wait to submit the forgiveness application? We've been saying that to a lot of our clients since probably September, because even without the change in administration, this was rushed out to get people money, and they were rethinking it as it goes along. So there's been lots of changes that have happened. So you have that 10-month period after your forgiveness period ends. So you have to make sure you get into that period, but I wouldn't cut it fully close to that, but I would wait to see if something else happens right now. I agree that would be a smart thing to do. How about rent that is creditable on a lease to buy? I think that is a gray area, but it seems that you paid rent and you may never convert it to a buy. So it seems like that would be considered as rent in my book. Okay, so somebody asks if you had all employees at the beginning of the covered period, but the PPP loan could not cover their salaries, you let go of what the covered period, you're asking for forgiveness, and you only have one employee left. That would come into play with what Pam was talking about before about the employee reductions, and Mark was talking about the full-time equivalent reduction that may be occurring. So you would have to go through the calculation, would be some form of reduction, and there's a possibility in that situation that it would not be all forgiven. But since the loan was only for a 10-week period, and if people were on for 8 weeks, there shouldn't be a problem getting full forgiveness, bringing in the rent, et cetera, as long as the percentage of the full-time equivalent reduction happens. So somebody asked it, so it's an either situation, and the shutdown requirement applies to the following quarters after shutdown. One thing I'm assuming that's an employee retention credit question. And that would be is if you were have a restaurant, for example, and you've been in a partial shutdown, meaning you can't serve inside or you've limited the amount of people who can be inside, you wouldn't have to have the reduction in order to get the employee retention credit if your takeout volume was up. But what you would be able to do is anytime there's a partial shutdown, you get that quarter for the employee retention credit. So restaurants would basically qualify for the employee retention credits. I am not sure. I'm saying I think we might be running to the end of the program. There's a bunch more questions that are out there right now. But what I'd like to do is just end it here. Just let everybody know, as I said, we will go through these, and in the next few days, we will try to answer all of these questions and get them over to John and Marcia. And I just want to thank Pam and Mark and everybody who joined us today. We hope this information is going to help you meet the challenges facing business owners and better understand the available forms of relief. If you have questions that weren't covered in our presentation, please don't hesitate to reach out to us and let us know how we can continue to be a resource for you. John, back to you.
Thank you very much, Howard, and I want to thank you and the entire team for today's presentation. Again, it was a lot of content, but you guys were able to do it in a way that made it user friendly. And yes, we'll make sure that we can answer any of those follow-up questions. But again, one of the strengths of Westchester County is having a firm like Mark Paneth, to be able to really be on the front lines, to be able to deal with these ongoing issues that businesses of all sizes, public and private, are having to deal with because of the pandemic. This entire presentation has been recorded. It will live on our BCW's Business Resource Center page. So if you were only able to catch some of it, or you want to go back and revisit some of the issues that were addressed, please feel free to do so. But again, to Howard and the panel at Marks Paneth, thank you for your ongoing support. Thank you for your leadership. Thank all of you for tuning in. Please remain safe, wear a mask, and we will see you all soon.
Thanks, John. Bye, everybody.